Good evening. This is Dwayne Lowry for the DPP Grain Desk on Sunday, March 4th. First of all, I want to apologize for my voice. I've been battling the flu for the last few days, and so if I'm coughing here, I apologize for that, or if my voice is just harsh. As far as the outlook for tonight is concerned, I'm not sure what the central theme is going to be. We have, let's start with weather. Weather focus has shifted away from South America over to the U.S. In terms of U.S. weather focus, I think you got a few different areas of interest. One, it's a little bit too wet in the Delta. We'd like to see some drying out there. Plenty of time for that to happen, but that is something that traders are watching. It's been drier than desired in the central and southern plains. Some relief has occurred, and we've got improved moisture forecast there Wednesday through Friday of this week, and again in the 11 to 15 day period. The northwestern Midwest has been drier than desired. That's been an area of trader focus. Um, got some improving moisture chances there. Well, actually, we've had a little bit of improvement in that particular region over the last week or so, and we've got some improving chances there in the 11 to 15 day. I'm not sure whether in and of itself is enough for a driving force to be considered bullish or bearish, but if I were to label it anything, I would label it as slightly bearish based on the precip chances in the plains and longer term precip chances for the northwestern Midwest. Outside markets are probably going to have some mixed and uncertain reactions here tonight. President Obama spoke in front of a pro-Israeli lobby today and needing to deliver a strong message of support from both he as an individual and the president and from the U.S. as a country that we continue to stand behind Israel, and there's been a difference in opinions between the U.S. and Israelis. The U.S. Wants to give diplomatic efforts and sanctions more time to come to a diplomatic conclusion. Israel is concerned that they may need to act soon. Part of it's been based on the idea that if the U.S. is not there with our military firepower, that they may need to act quicker than we might have to act because um, uh, they're going to need the U.S. firepower to get deep underground and attack these bunkers as they are farther underground. I think that today's speech from the president may go a long ways towards putting to rest any fears. It might buy some time for economic sanctions and a diplomatic effort. And I think that over the last week or two, there's been a lot of talk in the media about an imminent attack from Israel. I think that imminent attack discussion is going to be pushed back. I think there'll be a little bit of calm that comes from that. The impact I could see is having some short-term corrective weakness in the dollar index. Might possibly allow the crude oil market to tone down a little bit and find some willing sellers on small strength. And I think that it may allow the gold market to look at what happened last week and some rolling over of charts and price action, and it may allow the economic outlook to be somewhat optimistic and less pessimistic. And as that all of that means that the investor is going to continue to look for places other than bullish commodity positions for places to put money. They're going to be more inclined to put it into equities. They're going to be less concerned about inflation. The Fed is not expected to deliver a QE3 program, and I think without that, that's going to weigh on gold prices. It's going to weigh on inflation fears, and it's going to weigh on general, buy commodity type of sentiment. And I think price action in the last week or so has been offering some turns in that direction, and it'll be interesting to see whether the U.S.-Israeli tensions can ease and unify as the week progresses through these meetings, to where the marketplace thinks it's less likely that we have an imminent military action. And I think that type of thing probably causes outside markets to react in a way that might be a little negative to commodities in general. And like I said, I think the weather is maybe a little bit negative. Um, Main theme that I've been trying to focus on here is corn, and the price ceiling theme that I think has been in place in October, and I think it's a price ceiling theme that will continue to be in place until we can get a spring planting problem or a summer growing problem. Either one is possible. The spring planting problem is less likely than we've had in recent years just because we got lack of snow cover in the Midwest. We're going to be less likely to get flooding. We're going to be less likely to lose acres due to flooding like we lost last year. Excuse me. You're going to have a larger acreage base, and you've still got a situation that while old crop is tight, it's not disastrously tight, and the USDA in their next monthly supply and demand may lower old crop carryout again, but it's important to realize here that the marketplace does not have a job to do to attempt to ration supplies. We may have a tighter carryout and a smaller pipeline, but we are not in danger of not being able to make that pipeline supply work. So we do not have a situation that requires price rationing here for old crop supplies. With new crop looking to expand carryout levels by basically doubling this year's carryout projection, it's going to be very difficult for traders, world buyers to get overly concerned about supply threats on old crop corn unless you can get a weather concern. With old crop already at a big premium to new crop, with wheat values already at historically very cheap values to corn, and maximizing wheat displacement of corn usage in both U.S. and globally, I think there's going to be a lot of pressure or let's put it this way, there'll be less pressure on U.S. corn supplies because of it. Exports could be increased a little bit, but they're not going to be increased much, largely because of the large global wheat supplies and the price relationship that's been in place and appears likely to continue. U.S. and world wheat supplies are very abundant. U.S. Wheat conditions, weather, moisture opportunities appear to be improving, and I think that by the time crops come out of dormancy, we're going to be relatively optimistic about a good wheat crop in the U.S., and this is on the heels of having an extremely large carryout level of wheat to act as a cushion both U.S. and globally. Fundamental outlook here threatens to be a drag on prices, especially if we begin to see a favorable spring condition. So in the meantime, however long that is, maybe the marketplace wants to hover in some sort of sideways upper part of these parameters, waiting to make sure that we get a good spring planting. I guess that's possible, but do not underestimate the downside risk just because we're hovering. We have added a lot of length to the corn market in the speculative community in the last 2 or 3 weeks, and I don't think that they've got a tremendous amount to show for their efforts, and I don't think we're going to be building momentum here. Beans have been up 14 out of 15 days. That's a significant and basically unusual string of price gains for any market, and to believe that that type of trend and momentum can continue would be naive. History doesn't support that type of thinking. At minimum, we're due for like a 40-cent correction in beans. At maximum, the risk is that we are making a more major top, and we have the risk of returning back to the January lows in the bean market. And to get something like that would imply that would probably have to mean that we've had a good spring planting season. We're not going to lose acres, but that is a possibility. The marketplace has also absorbed a lot of small South American production ideas, and yet early reports from northern Brazilian areas have been very favorable on yields, and Informa last week lowered their Brazilian soybean estimate by 2 million tons, but they increased their Argentine estimate by 1 million tons. Overall, we do not have a major supply threat here in the bean market, U.S. or globally, for this marketing year. It is true that in 2013 somehow we're going to have to get more acres planted into soybeans. Whether that comes from the U.S. or whether it comes from South American expansion or both remains to be seen. But as a normal growing season in 2012 is going to allow corn acreage to be reduced, soybean acreage to be increased, and the overall supply and demand outlook for the grain market here is much improved from what we've had the last several years, and the overall backdrop is significantly different. So unless we are dealing with a production shortfall in the U.S. here, normal conditions will lead to increased carryout levels and a building and an improving of U.S. and global stocks. Um, so as far as tonight is concerned, I don't think we're going to see much probes into positive territory. I think we'll be relatively quiet. Probably some weakness on ideas. Friday's late strength was overdone, and ideas that technical conditions remain very vulnerable here, and the fundamental outlook doesn't have anything really to excite the bulls here today. So for the DPP Grain Desk, this has been Dwayne Lowry.